Welcome to today's webinar, and we're looking forward to talking to you about what your bank really looks for in business loan applications. Thanks for taking time to be here today and see if we can make it exciting to have a banker speak for the next hour or so here. So really, as much input as you have or questions you have, I'm always happy to go off topic and answer any questions along the way. Just thought I'd give you a little background on the front side for my banking career. I have been a banker since 1986. So I started with a larger regional bank in the Kansas City area, and did that for about 5 years, and learned a lot about what I liked, what I didn't like about banking, and figured at that point that community banking was the right direction to go. And so I made a move to a community bank, and like so many others, a lot of those go through acquisitions. So after a couple acquisitions, I thought it was time to try another community bank. So I spent about 10 years at that bank, and 9 years as president. I got really lucky at a young age, at 32, to be a CEO. That was supposed to happen about 8 years after that, and the CEO left, and the owner came into my office, and he's like, "Well, it's time." I'm like, "For what?" And he's like, "You're CEO." I'm like, "Oh boy, here we go." So we had a bank exam about 4 weeks later. So I'm like, "Well, you might as well just get right into it." So it was a lot of fun. And then I left that institution to help start Gateway, and even prior to that, I was living in Arizona. I've been here for about a little over 23 years, and really enjoyed the Valley. But worked hybrid between Arizona and Kansas for quite a few years, and and then a group. I actually just back up a little bit. I was just standing in my backyard grilling, and my neighbor leaned over the fence. He's like, "Hey, would you be interested in starting a new bank in Mesa?" And I'm like, "I don't think so." And so we talked for a little bit while longer, and he spoke very highly of the folks that were putting the bank together. And I thought, okay, this could be fun. So we did put together a group. I was the last member of that group to come together, and the last founding member. And we started meeting, well, that group probably started meeting towards the late, probably 2006. And I came along, actually probably 2005, 2006, I started chatting with them. In the January of 2007, I came on board, and obviously have been here ever since. So really enjoying it. I always tell everybody, I feel like I have the finance blood in my veins. My grandpa was the president of a federal land bank back in Iowa for many, many years. And my dad tried his hat at banking, and did that for a few years, really did not like it, and became a regulator. So I have to tell everybody my dad went to the dark side after that. But I will say that does give you a really good consultant to have, especially when you're opening. So that was incredibly helpful. While in a lot of ways, banking looks a lot different than it did in the 80s, from how we do financial spreads. When I first graduated college and went into banking, we did financial spreads by hand. So, now you can crank out a spread in, 4 or 5 years in an hour. And it took me, I think, 2 days to do my first spread. And I thought, man, I thought I was good at this. But it did, that's one of the areas where change is good. Also had to wear the 3-piece suit every single day. Do not miss that either. So part of the perk of living in Arizona too is wearing a golf shirt every day. And really at that point, most of the positions in the bank were siloed, where you really did one thing. And that has really changed pretty dramatically, especially in community banks, where you wear a whole bunch of different hats. And really, the computing capacity, we did have computers. My first laptop I had, I wish I would have kept it. It probably weighed about 50 pounds, and it had a screen that was maybe 2 inches by 2 inches. And man, it was a beast to carry around. But I was pretty excited when we moved up to that level. And really, just even in my banking career, which I know I'm getting older, but it's not that long ago, that, the second bank I worked for, they were still, instead of having a computer screen with all the balance on there, they were actually balancing all of the notes, all of the payments on the back of the individual promissory notes. And that was actually done that way probably until about 1993, which was a little longer than they should have done it. But it was somebody that had been with the bank for probably 40 years, and that's the way they always did it, and that's the way they planned on doing it. So big changes. While we do have a lot of the differences, there's some things that remain the same. Relationship was important then, it's important now, it's going to be important in the future. And I think that's where the community banks play a really important role. So let's get started. Now we'll see if my PowerPoint decides it is going to agree with me or not. So. Well, here we go. All right. So a couple of things we're going to cover today. And let me say this too. I think Chelsea said early on that I can be flexible and really to ask questions throughout, so she can interrupt me anytime. If there's something I'm not covering that you're interested in, I'm happy to stop and cover that or go into more detail if necessary. If you do have a question that I don't know the answer to, or we don't have time to get to, I'll have my contact information at the end and happy to follow up with you afterwards. I need to probably start by saying commercial lending is very different than consumer lending. In consumer lending, it either fits or it doesn't. You fit into the box and certain criteria and you make the loan, or it doesn't and you have a turn down. For commercial lending, so much of the decision is relationship driven and based. And, first and foremost, and at Gateway, and I think at any of the community banks, what we're investing in people. We're investing in the concept, we're investing in the business plan. So the owner obviously has to be able to discuss the business plan, but really also needs to be the biggest cheerleader for that business. And that's what I am the only male in my household, including our dog. And everybody, my daughters always ask me what I do. And one of them said, Daddy talks. And the other one says, Dad's a cheerleader. So I think they probably hit the nail on the head. Really, and one comment I will make, and it does not happen very often, but, most bankers, and hopefully you've had this experience with your banker, is most of your contact has been at your business so they can see what you do, you can walk them through and you can get excited about, whatever it is you do, whether it's, whether you're manufacturing something or it's a service related business, just introducing to your teams, your processes. It's really, that's, going into my 36th year, it's still exciting to walk through a business and see how things work, why they work best. It's just fascinating to me. It doesn't happen often, but sometimes when you meet a new client, and you're touring the business and they really don't like the business or they're not too excited about it. For me, it's a pretty easy pass at that point. It doesn't happen often, but it's like, okay, if you don't like what you do, this probably isn't a good start. So today we're going to talk about when to reach out to a bank, what to look for in a lender, tips for completing your application. And I'm going to try to hopefully take some of the mystery out of that and make it a little bit easier. I know I saw some of you posted early on that you've had success in your applications. Others struggle a little bit more. And I think it just depends, if you've done it frequently, you know how to do it, what's expected. And then lastly, really some questions to ask to ensure you choose the right partner. So let me go. All right. So when to reach out to a bank, for me, this is really starting as early as possible. And I have, some of the clients that I talk to, they reach out to me before the company's even formed. It's just in the thought stage. It's in the concept stage. But really at that point, that's if ideally, that's when you would first reach out to a bank. I'd say, we get quite a few once they're, maybe very early stages of their company, and some others when they're, I used to say when the company's mature, but now I say well established, because I really, you just learn things as you grow up. And I, about 12 or 15 years ago, early on in Gateway's life cycle, I'm like, wow, there really is no successful business that ever is mature. And we're always learning, we're always innovating, we're always growing, hopefully. And in my opinion, you don't ever really ever get there. So you don't ever get mature. And mature is not really a word anybody's ever used to describe me either. So I think that that fits really well. So there's really a lot of perks to getting involved early in your business, or the earlier in the process. Number one, you're building a relationship and your banker knows what's happening along the way, and hopefully getting as excited as you are about what's going on in the process, and you're getting closer to open. Also, you're not getting an hourly charge from your banker. It's your free consultant. It's definitely worth bouncing ideas off of, and really you're going to get some tweaks in your business plan and your projections, and really just kind of, hey, here's some things I've seen in the industry, and I think it's really helpful along the way to have that advice. And obviously you still need your attorney and your accountant and your insurance folks, but the bankers, I think, one of the good resources you ought to have. It's also, the earlier on you get in touch with your banker, it's likely they'll refer other professionals to you, that you be like, well, you may not have thought about this, or here's somebody that, if you don't have in your arsenal yet, here's either a profession that I think you should talk to, or here's a couple folks in that particular industry I think you should talk to. And you also know, when you have that contact early, you'll know long before funds are needed, if you're with the right banker or not. And if they're going to buy into your vision. You can ask along the way, what am I forgetting? What doesn't look right? What trends do you see in this industry? What do you think is needed to get this ready for a loan committee? And just kind of as an aside, and I try not to go off the rails too often because it's really easy for me to do that. But I was thinking about some of the most successful businesses that I worked with, and not all, but almost all of them had an advisory board of mentors. And I wanted to mention, I just got back from a committee I sit on with the American Bankers Association, and we finally got to go back in person after 2 years. So we were in Washington, D.C., and we had one of our presentations was on diversity, equity, inclusion. And we were talking about successful boards, what makes a successful board. And as you're building an advisory board or a board for your company, the most successful boards have an age gap of over 30 years. So whether your youngest is 20, your oldest is 50, the larger the age gap, the higher the performance. And that wasn't just banks, that was really any type of company. So I thought that was really useful. If you don't get with the bank right, as you're in inception or brand new, you can also happen anywhere along the way, and you can get that same benefit. You just probably have gone through some bumps with your bank along the way. They either haven't been helpful in you scaling up or having the right information. And I think sometimes a bank can hinder your growth, and sometimes they don't do much to foster your growth. And, and I think if you're with a community bank, they're probably always going to be, brainstorming, getting excited. We're excited what it takes to grow Gateway. I never looked at myself as an entrepreneur until we started a bank, and I was laying on the floor, putting together furniture and having my wife and my kids come in and stamping and licking envelopes and sending things out. And I'm like, okay, now I'm an entrepreneur. Now I can look at this from a little different perspective. At this stage of the game, when you're talking to your banker, it's really helpful if you share what your pain points are in your banking relationship, and really, I think, have them, review your entire banking relationship. And some people bank at several different places. Some have one bank, but really to go through, here's what I have on the deposit side. Here's what I have on the loan side. Here's what feels right. Here's what doesn't feel right. Here's what I think I need to grow. And here's what's been stopping me, or here's what's been frustrating with me with my bank or credit union. And I won't say Gateway's never had a customer that's been frustrated. I think some people do apologize when they call and say, hey, James, I got a frustration. Here's what's happening. I'm like, I appreciate you took the time to tell me. And, I may have had one or two other customers bring that up. And it's like, hey, here's a product or service we need to add, or here's something we need to change in our process to make it easier. So, we're always trying to make that customer experience better and better, but it's, you need to tell your banker, here's what I like, here's what I don't like. And then really consider your banker a resource or a partner. We have touched on this a little bit, but really when, your banker, your insurance agent, your accountant, they need to really be members of your team. And, they're not on the payroll, but they're a pretty critical role to how your company's going to operate. So, I would say the majority of my clients, I know most of the people that they work with and on the professional side in all those areas. And, they'll seek the company owners will seek our input when they're buying new equipment or trying to decide, do I need to buy a new building? Do I need to add a second location or third location? And really, it's good to have that group to bounce those thoughts of what are the pluses, negatives. So, you're drawing your Venn diagram, trying to hit that one little dot in the middle. Okay, where's the sweet spot? And it's also good to have that professional group around you and surround you, so you can even talk about, just workforce issues. Obviously, I would assume most people on the call are having, you have difficulties hiring. It's a tight market. How do I get people? How do I keep people? How do I deal with remote? How do I deal with hybrid? And some of your industries, that is probably how it started and it works. Banking has become that way. I now have I have a remote employee that's in outside the LA area and on the credit analyst side, and that works really well for me. But after with the pandemic, with 2020 and 21, we have more people that are moving to hybrid or remote and want to stay that way. So it's really trying to figure out, okay, what do I need to do to stay ahead? What are the right moves to make? And I really find, among business owners too, to have that peer group. I haven't found many industries where peers aren't willing to share what works. Here's a process that works. Here's one that didn't, and not that every company is the same. But I find that most are really open. And other than sharing maybe the ingredients to a secret sauce, I think most folks are very, very open. And I really think, you take it to a totally personal level with your banker. I think they ought to know you, your family. You ought to know them and their family. People have asked if I thought relationship banking works. And I'm like, well, I've been doing it for a whole lot of years. I think it does. It can be exhausting, but I think it's what builds long-term relationships and really, long relationships with the clients, and what also keeps long relationships and long-time tenure with the employees of Community Bank. And I thought I'd just give you a couple of quick examples of what I've seen that starting with the bank early. I've had a couple clients that are locally here that are infill builders. And one of them, we actually spent 4 years talking to him, looking at one of his early on projects. And he was laying out vision for, hey, when I find property that looks like X and in this size, is that something that I could work with Gateway on? We thought we had a fit. The original project was significantly larger than we could handle. And he's like, that what I want to do is more what fits in your wheelhouse. I can move away from the private lenders and some things like that. And we really spent 3 or 4 years getting to know each other and talking about it. And that project really finally came out of the ground in 2021. And it's just been so much fun to work with. Got another infill builder I worked with. We spent probably a year talking about a particular project and location and what it was going to look like. We've tried a little bit of everything. In my career, I did my first Hindu temple, which was a blast to work with up in North Phoenix. And we talked for probably 12 to 18 months about, here's what we need. We've been to 2 or 3 banks. They've told us no. Here's what our vision is. And, so I had about 15 months to get to know the decision makers with this group and what they wanted to do. And it's like, okay, here's what to make this happen. Here's what we need to do. And here's the steps. And we took about 15 months to do that. We laid out all the steps. They did some fundraising and we actually made it happen. And it's so far ahead. Well, we finished on time, thanks to the contractor. But as far as their debt on it and how that turned out, they're significantly ahead of where they expected to be. So those are fun things, getting started early. I've also done the same thing with some other churches. I got to tell you on a side note. So you're coming from, I have Methodist pastors on both sides of my family, my wife's family, my family. They were all Methodist pastors. That's why I tell everybody we're Lutheran now. So not that it was a bad experience, just something different. But really, that's led us into a lot of nonprofit lending. So I don't know if we have any nonprofits on the call today, but churches and nonprofits, we probably deal with 60 or 70. And they're just a lot of fun to work with. And, it's different for a banker to look at a budget for a nonprofit, and it's pretty much always going to show a profit of zero. And it's like, well, wait, how does my cash flow work when it's zero? And so it's just it's a special skill set, but that's something we've worked with a lot. I just finished a cohort call about 3 months ago. There was about 20 businesses on there. And one of them's like, the banking side hasn't really been that much fun. I'm looking to open a new auto repair location. Is that something you talked to me about? I'm like, absolutely. It was actually a yes within a week. We got everything put together really quickly and put that together. And it was just coming from, if you've only had experiences with a very large national bank, and in Arizona, that's pretty typical since it's they control by far the large majority of the market. I think most folks assume that, hey, if I got a no here, it's going to be a no everywhere else. And these are going to be the same issues. And that's really not the case. There's fits for the national banks, the regional banks, the community banks. And I think it's just finding that right niche.
So James, quick question. I have a couple questions in the chat, and I think that was a perfect segue into some of them. Before we continue on about talking about what to look for in lenders, can you talk a little bit about how a community bank is different from another bank, like from some of those big traditional banks? We have a question like specifically that, and also about lending specifically, like are community banks more likely or willing to work with a business that has no business credit history versus maybe what a traditional bank would? And you might be answering, I might be jumping ahead and answering, we're asking some questions that are later on in our presentation.
So on the first one on community banking, what I will say is that the biggest difference is, this is my bank, this is my, my investment. I'm one of the shareholders, but when you have a community bank in your team, and for us, it's really all the way throughout. Not all of our team members have bought into the bank, but a lot have. So you're really invested. It's not, I think you look at it's not just a job. This is my bank, this is my company. So I think it's incredibly more personable. It's frustrating that some of the large banks use the word relationship banker because it kind of ruined it. And when you get a new relationship banker every 6 months, that's not what that's supposed to be like. So typically, your community banks are going to have a lot longer tenured staff. I have several that have been with me since we opened in 2007. And quite a few, others along the way as we scaled up that have now been with me 10, 11, 12 years. So I think that's a big plus on the community banking side. As far as lending, 8, 9, and 10 was probably a good feel of what can go wrong or what's good or bad. And if you're a national bank and there's pockets of the country that are really tough, like, when at that point, Arizona, California, Georgia, a couple different areas in the country, Nevada, were really hit hard. So what you do as a national bank is you just pull back. And you may pull back in an industry, say, okay, no more contractors, subcontractors. We're just not going to do that anymore. I've seen B of A do that twice in my career, which is I've seen letters go out. I saw a letter go out the first time they did it in my career, and to a company that they had banked with for 50 years and said, we are not going to be in this industry anymore. And they do. And as things get better, they're like, oh, we're back. The community banks, don't pick and choose when they're going to lend. We lend all the way through. We lent all the way through the downturn. So did all the other community banks in the area. So, and I'll get to some of the questions at the end that probably will trigger out whether you work with a community bank or what you need. And a lot of it probably is going to have to do with size and how much money you need. But I think, does that answer some of those questions, Chelsea?
Yeah, I think that addressed some of them, and we can kind of circle back to maybe some of these towards the end and see if we still have some further further digging to do.
Sure.
I know we're almost halfway through our time, so I'm going to let you dive back into what to look for in a lender.
So see, and this is the problem you get when you get somebody that you got two preacher's kids and you talk for an hour with no issues whatsoever. So like I said, I've been in Arizona since 1998. And one of the, let me move screens here real quick. Get excited about what I'm talking about. Just, our marketing team put together a couple slides just to somewhat keep me on track, which is a plus. So we have a great team. So here we are. So I came here in 1998. And one of the big differences I noticed coming from the Kansas City area or just Midwest in general out here is most of the people that had front-facing contact with clients out here were pure business developers, which isn't a bad thing, but they weren't the folks that were going to be doing the loan write-ups. They weren't the ones that had the decision making behind it. And so a lot of people are like, well, hey, who's your lender? It's like, oh, here's my lender. And so, well, they're not really a lender. They're a business developer, which is fine, but they don't have that skill set. And, most of the calling personnel I've seen are strictly business development, and they're looking for quota. You're going to see them on the front end. And when they get that sale, and then you may or may not ever see them again. And in all honesty, until I came to Arizona, I never had pure business developers. We only worked with lenders. And coming out here, part of it is revelation and growing up and learning what works, what doesn't. So I hired 3 business developers, none of which had I take it back, one of them had some banking experience, but really they all came out of different industries. And it's just what I learned on business developers is you hire based on that, no different than any other position in the bank. It's all based on culture and vision, and do they like what community banks do? So, we're very heavily driven towards the lending side at Gateway. I only have 16 employees. 11 of us are tied to lending. So that is definitely where the focus is. And 3 of those are business developers. The difference we have here on business development is the business developer, if they're the ones you've contacted, they will always be your primary point of contact. But they also will bring in a lender if it's a loan situation, or somebody from the deposit operations side if it's a cash management issue. So it's really the team getting to know you. So we've talked a lot about Gateway being the cheers of banking. It's like, hey, Norm, when you walk in, once you've been here once or twice, there's multiple people that are going to know you by name, which is, I think a lot of people don't ever come into the bank. We have some that do very regularly. And I think it's really more of a social thing than anything else. So let's see. Oh, also, you can tell that I prefer the community banking side. I'm just a bit biased. So, and I do have friends that work at all different sizes of banks. And that's another thing that's funny is there's so few of us. And I think the thing is none of us get along. The funny thing is most of us get along really well. And on the community bank side, we all know each other. We all work together. We collaborate. And the only thing we do collaborate on is how to pick on the 3 big banks and how do we keep taking market share from them, which we've done really well over the last 15 years. So, and then also one of the questions that you asked a minute ago, Chelsea, that somebody threw up in the chat. And I think one of the biggest pluses on community banking, and I'd be happy to give you anybody on the call, different clients of ours to talk to, but in a large bank or even in some of the large regionals, when things get tough, you're going to go to a special assets department. And most special assets departments are like, make this loan go away. And just whatever it takes. If the company has to close it. At a community bank, we don't ever want to take property back. We don't want to take a business back. And it's, we're always working with you on how do we make sure that you're viable long-term? And if I can take care of you and you take care of me, you're going to be a client for a long, long time. And I'm sure all of you on the call, instead of trying to hit that one home run with Chelsea one time, I'd rather have Chelsea as a client for a decade, for 20 years, and maybe multiple generations. So I think that's one that's a really big plus. The frustrating thing in Arizona is when we opened up, there were 58 community banks in Arizona. We're down to 13. There's only 2 of those are tied to out-of-state holding companies. So there's really only 11 of us in the state. 6 of us are here in the Valley. I'll just tell you who they all are. So it's Gateway, Metro Phoenix Bank, Republic Bank, West Valley, and then Goldwater Bank. And then by far the largest is Alliance. So Alliance is bigger than the other 10 put together, and plus quite a bit. So those are the players. And one of the things dealing with the community bank is you should be able to get to know either the chief credit officer or the CEO or both. And those folks are obviously sitting in on loan committee and are making the decisions. And you're like, okay, the person that's sitting here, I'm giving my pitch to, they actually are one that has a vote, or they're the ones that are making the full decision. So I do think it's worth interviewing. I think you ought to interview lenders. Lenders probably look at it as, hey, I'm calling on you. I'm going to interview you. Well, just throw it back and interview them instead. We used to have, through Local First, once a year, we do what we called our speed dating night, which was kind of fun. We had 10 or 12 community banks and credit unions, and you just bounced between the tables, and you just got basically 4 or 5 minutes with each and saw who was a good fit. It's a fun way to meet a lot of bankers in a short period of time. It's a fun way for us to get to meet new clients. But you're looking at that point, do they have the knowledge of my industry? Is it a good culture fit? Do I like them? My litmus test is really easy. And I tell everybody over and over again, I think everything we need to know, we did learn in kindergarten. I think business is really pretty simple. We just make it overly complicated. My litmus test for when I bring a new client on is this somebody I would go out to have coffee with outside of work? And if it's a yes, I'm like, let's go. If this is somebody like, I don't want to ever see this person again, and that does happen, and you find right personalities. But in addition to going through what you might want to look for in a lender, you may also need to consider firing your existing banker. And if your banker's not part of the team, they're unengaged, doesn't have your attention, lacks ability or knowledge, it's always the right time to move. And I know it always feels painful to say, oh man, if I move my relationship and I move my checking and I've got all my auto debit set up and this is a pain. I just tell people, don't wait for the tough times. That's especially when you need that bank to be with you. And we've had multiple events now between the Great Recession and really starting in 7 through 10, and then having the pandemic. We've had 2 once in a lifetime events in 10 years. And really for us, I look at Gateway, and from 2008 to 2011, and some of the other community banks would have very similar experiences to ours. So the Great Recession was the worst we've seen in our lifetime. My dad's like, hey, it's the worst you've seen in your lifetime, James. I'm like, geez, Dad, you never saw this in your lifetime. You never had to deal with this. And, we had probably 20 or 30 companies that really, really struggled. And, and 8, 9, and 10 was really a good study of fear and what fear does to people. Those that didn't lose their jobs, pretty much everybody else acted like they were going to. And really to be with a good bank at that point, somebody that's going to work with you and walk you through the process, it's immeasurable how valuable that is to the company. And really, I look at, I have 2 rules. So don't lie to me and don't hide from me. And if you don't do that, everything else is good. And the news isn't always good. There's industries that get hurt. There's weather issues. There's economic issues. There's all kinds of things. But I really have found very few things we can't work through over time. And if any of those on the call know me, I pretty much always try to find at least one place in the presentation I can have at least one Snoop Dogg quote. And I was trying to find one that fit really well for a banking relationship, but it really, when I talked about firing your banker and really making change happen, and one of the quotes he has is, sometimes a loss is the best thing that can happen. It teaches you what you should have done next time. And I really do think I've seen people hang on to their bank just because it's it's maybe easier to leave or not as painful not to have to go through that process, to find the right lender and go with somebody that can scale you up, it is always the right time. So any other questions yet, Chelsea?
Yeah, but I think let's go through their tips for completing applications, and then let's dive into maybe some of those questions and circle back to some of these questions in the chat.
Absolutely. So really I know we're probably getting a little tight on time. So really what I wanted to go through here was on our website, and you kind of see it on the page here, we have a link, and we put up a few years ago. It's like, we just used to send lists of, hey, what do I need? It's like, well, it's pretty easy and it's not a secret. So we put up, here's what we need. There's another page to this that really is tied to industry specific lending. If you're a builder, or if you're doing investor property financing, here's what we'll need. So it'll cover all of that. Really, and the tips for completing the application, really the pain points for most people are on the forms that, most everything in there, your tax returns, your financial statements are things you have, your bank statements, copies of IDs, things easy to put together. The pieces that are unique are typically the commercial loan application and the personal financial statement. And schedule of indebtedness, which really kind of blends into both. And this is, a lot of people, when you send them this, are like, I have 15 things I have to do. I don't know what to do. And so they'll send you what they have or what they know, and then the rest of it will just drag and drag. I tell people, spend time, the forms that I just talked about in the commercial loan application, the personal statement, your banker will walk you through those. You can come in, they'll come see you and say, and this moves the process so much faster, whether we hop on a Zoom call or the phone or get together in person, just keep in touch with your banker to keep the process moving. The faster we get that full application, the faster everything moves. If I've got 20 loans on my desk and 3 of them are ones where I just have bits and pieces of it, it's just going to sit. It's not that I don't care, it's that I can't finish it. And, some folks just aren't going to get that moved along very quickly. So really gathering and completing your package as soon as possible so it won't stall. If you get caught up in any part of the package, talk to your banker and they'll help you do any part of the work. I will say on the business, if you've got a new company, it's really good to have a brief business plan. I don't need a 3-ring binder with 100 pages in it, but really just to show in a little thought process. It's almost like going back to college. It's like, hey, James, on your class, show me your work. So I'm looking for, provide a little bit of narrative. Here's some brief and rough projections that I'm starting with. But what I'm even more interested in, what are the assumptions behind it? Give me the handful of things that's like, well, here's how I came up with that price, or here's how I came up with that cost, or this growth, this is why. So I'm just looking for thought process at that point. Also on the application, lastly, really be upfront if there's any weaknesses or pitfalls. If there's bad credit or anything else, don't let that come out as a surprise somewhere in the application. I always appreciate it. Somebody's like, James, you're going to look at my credit. It looked like crap 3 years ago. Here's why. The business failed. It was through a downturn. I got divorced. I had a family member die. I had personal health issues. Whatever it is, I can be like, okay, that all makes sense. I see what it looks like now, or I see why that's happened. And I think you just cover that hurdle. And really that's something you find out right then with your lenders. Like, is this going to be a deal breaker? It's almost the first thing I throw out. And you'll find out right away if that's going to be an issue or not. I'm going to try to wrap up and then open really most of the rest of the time up for questions. Last thing I wanted to get into, it's like getting a banker to walk and chew gum, see if I can do my PowerPoint and talk at the same time. And really, this, I think, are some, I didn't put all the questions on here. I put a few that just came to mind. But, after you discuss your pain points with your banker in your banking relationship, ask the banker, how would you structure a relationship if that's what I need? Loan structure is destroyed so many companies. And it's not really that the company performed poorly. It's that the whole loan was structured wrong. I'll give you some examples, and there's definitely some seasonal companies. The most seasonal one I ever worked with was a fireworks company in Kansas City, and it was a big fireworks company, and they're just a wee bit seasonal. You get about 90% of your revenue in for the 4th of July, and about 10% for New Year's. And they had issues with their bank for a long time, and we figured out, okay, here's how we structured the cash flow. Here's how we're going to structure the repayment, because this is when your money comes in. So it was pretty easy. It's, for me to ask them to rest their line of credit in the spring was silly, because they're going to be maxed out. They're going to buy, their warehouse is going to be completely full. I'm looking at, hey, once we get through the 4th of July, you may be able to pay me off for a few weeks. That makes sense. But if there's any, on the line of credit, I'm not really looking for principal payments except after that. I've had multiple subcontractors, depending on where they're located in the United States. If they're seasonal, I can say, you know what, I know you struggle making your payments every winter when you're not working. Why don't we just structure them where we have 8 payments a year, and we just skip, November, December, January, February every year. I mean, interest is accruing through that period of time, but there's no payments. And another one that came to mind right away was early on after we started Gateway, maybe 2 years in, we had a client come to us that banked at Wells, and I'm not meaning to particularly pick on them, but they were getting ready to be foreclosed on. It was a real estate loan that was about ready to balloon. And it really was just structured really poorly. There were some weaknesses. It was a tough time. They weren't at their peak at that point, but we figured out how to do it that minimized risk for them and for us. They ended up being able to keep that property. They sold it about 2 years ago and made significant money on it. And 10 years earlier, they would have lost everything and realized no income. And it was really for them, that particular loan was all about how we structured it. So that is really important. Another one, who will I be working with on your team? You should have a primary contact, but then you should also have a few other touches. Like if you bank with me, I'm not always sitting at my desk or sitting by my phone. I am most of the time, but to have somebody on the depositor loan side and know who that is. Another thing that I just doesn't get covered very often is, what are my ongoing requirements to have a lending relationship with your bank? Once I set up a line of credit, what's it look like? What do I have to give you? Well, annually, I still want to see your personal statement, your tax returns, your company statements, tax returns. If it's a line of credit, I'm probably asking periodically for your accounts receivable, accounts payable, aging. If you're a contractor, I'm looking for some work in progress reports, some budgets, maybe. Just what's it look like? What should I be ready for? Once I sign the doc, I know it's probably all in there, but just sit down and tell me. So it's not a surprise. They're like, 6 months in, you call me and say, hey, Chelsea, where's your accounts payable? And it's like, I didn't even know I owed it to you. Well, you signed it. It was in the form. It's like, well, you never told me. So even if it was something we covered, I think just really being aware of what that looks like. Another one of the big ones for me is, how long have you been with the bank? And really, I would do my research ahead of time before you interviewed your bankers. I go on LinkedIn. If your banker's been at 10 banks in the last 15 years, it's probably time to look somewhere else, because you're never going to build that long-term relationship. And there are times where you need to move. I've worked at 4 banks in my career, so obviously I thought it was worth moving. I've spent the last 25 years plus at 2 places, so I'm not a big job hopper. But there are times where it makes sense to move. A bank might sell, or we aren't philosophically on the same page anymore. But I do think, finding a banker that has some tenure and stayed in a particular position is a big plus. And then asking them, why is my bank, why is your bank good for my business? Why is it a good fit? Is it long-term employees, knowledge of the industry, competitive rates, better products, services? What is it? What's it look like? And then really, do you have experience dealing with my industry? We always try to loop in. We aren't stepping over everyone trying to grab a deal to get the sale. It's really finding who on the team has the most experience with lending to a nonprofit, with lending to a contractor, with lending to a builder. Who's the best at that? And then, do you have any references I can speak to? I have quite a few that I get from, I get asked that a lot more now, probably because people know I'm willing to give it. I usually say, give me 48 hours because I don't have a pat list of here's who's going to give you a reference. I try to curate it based on a company that is in your industry or like you or going through an issue like you. And then I contact our client and say, hey, do you mind giving this reference? 99% of the time it's no, but I want to make sure that they're okay with that. But I think that's a fair thing to ask. A couple others I didn't have on there. What's your legal lending limit? Just to tell you what Gateways is, our legal lending limit's quite a bit higher than where we set our internal limit. But for us, we go up to $2,825,000 in-house. We have loans, we've made loans in the 6 to 7 million range, but we'll bring in a partner bank that'll go with us on that. You'll never deal with them, but that's how that works. And that way, like, hey, if my company needs to borrow 20 million right now, is Gateway the right fit? Probably not. So, different size banks are the right fit. And like I said, what's the loan process look like is also a good question. When I'm first applying, I was like, hey, James, if I give you my package, what's it look like? How long does it take you to underwrite it? When does it go to loan committee? When am I going to get an answer? And then if the answer is yes, about how long after that does it take to close the loan and make this all happen? They ought to be willing to share all of that with you. And how can you help me scale up?